Hi traders, this is TradeAlerter from ForexSignals.com on Thursday the 25th of September. Now today we've seen a lot of movement in Asia. This is on the back of the RBNZ Governor Wheeler, who came out and he said that he expects New Zealand dollar to fall a lot further in its normalization, and that he is happy with how far it's fallen recently, but he does want it to fall a little bit further. Not only that, he's saying that being overvalued is one of the prerequisites for intervention. Now, it is unlikely that the RBNZ has been intervening at these levels because the US dollar has been pushing the Kiwi down itself. I'll bring up the Kiwi dollar chart at the moment. Now, what we're looking at here is that the Kiwi has broken 80 cents. Now, the big target back only last month, or 2 months ago, once the market reversed, some of the big targets that we did have were 82.50 and then 80 cents. And we've broken that 80 cents level. Now, this is a big level that people who've been selling the Kiwi would be looking to take profit. Yeah, and anyone selling underneath 80 cents is pretty keen. The market, it's moving over 8 cents, which is a lot for the Kiwi, and that's generally going to prompt some sort of pullback when we get a catalyst. So some sort of retracement back up to say 81, 82, 83 even. All right, so it is important when you're watching the market that you don't get too carried away with some trades, some trends that are very mature. So this trend is very mature, and I'll be looking not only on the Kiwi but also on the Euro for some sort of retracement along with the Aussie dollar. Now, the earlier today we did have the ECB governor also come out and jawbone. So this is a lot of movement for Asia. Usually you don't get this sort of movement, and it helped the the Euro break 127.50. Now, after the Euro broke 127.50, we did go down to 127, but the market's found support here as well. And considering that we have fallen so far without a retracement in the Euro, it is likely that the US dollar will come under pressure shortly as soon as we do get a reason. Now, some of the data that we have out tonight is the durable goods. If you remember last month, durable goods was very strong. It came in at 22% because of a large order of planes that Boeing had. Now, so this month is going to be a very negative number, relative month on month, maybe minus 20% as forecast. And this sort of number might be able to prompt some of the selling. And once you get a little bit of selling of the US dollar, it can continue in a little bit more aggressive fashion. These sort of trends, while very strong, and I do want to buy the US dollar, definitely not at these levels. It's hard to explain the danger of chasing a market into levels where as soon as we get some sort of bad news from the US, and that could be next week, it could be at the non-farm payrolls next week, then you could see very sharp selling coming through on the US dollar, and it would be very hard to get out of some of these trades that you establish following the trend. All right, so the trend is your friend most of the time. You do want to follow the market where it's heading, but definitely don't want to chase it when it hits record levels or new all-time highs or lows for the 10th, 11th, 12th day. So looking forward, what are the ways to play it? If you don't want to play some of the majors itself, you want to play some of the crosses. One of the ones is a nice carry trade is the Aussie yen and the Kiwi yen. If we bring up the Kiwi yen now, we see that the Kiwi yen is the trade that I'm in at the moment. Now, it is underwater. I bought at 87, relatively high on the grand scheme of things, but this particular trend is strong, and I do like the Kiwi for a bounce here. So we've got a relatively tight stop in, and we're looking for a move back, actually to new highs. We don't want it to go back to 88. We want it to get it back to 90. So that would be, a new level there. And look, the Japanese monetary policy should allow that going forward. And if dollar yen is to continue its rally up to 110, which is its big level, then you could see that any sort of recovery in the Kiwi to the 81, 82 level will allow that. All right, so stay nimble. Kiwi is still only 20 pips off day lows at the moment, but we are looking for some sort of base to come in, and then short covering back above that 80 level. That's what we'll be looking at here, depending on how this candle forms on the daily. If we were to get back towards 80 cents, it's going to be a very long wick here on the candle, and that's something to look at when you're a trader, that the market's found support underneath a key level like 80 cents. All right, so come into the trading room at forexsignals.com. You'll find me there. We can have a chat about some of the trades. If you are going against a trend like I am here at the moment, make sure you do use a stop, because it is a game that's you are going for a big return, but the percentages are less than 50-50. All right, so you need to stop in those regards. So 20 to 30 pips would be the one that I'll be looking at there. All right, good luck, traders. I'll talk to you again tomorrow.